Hello there and welcome to FX Street Currencies in Play, brought to you in association with Royal Financial Trading. I'm joined by Ryan Littlestone, who's a independent currency strategist. How are you today, Ryan?
Very good, Zach. Very good morning to you.
Right, are the currencies winding down for the weekend, or is there still a bit of life left in them?
Yeah, we're finding that currencies are treading water quite often, quite a long time during the day, and then we're having interspersed with data points and a bit of volatility, and then they sit and go back to sleep again. So we're sort of heading towards the summer months and the quieting period.
Okay, well, let's look at the top trending stories of the moment. Euro dollar firm are around 111.70 ahead of PMIs. Canadian dollar rises on oil recovery, strong retail sales. And the dollar index deflates to 97.1, eyes data and Fed speak. What's the highlight there for you?
Well, the euro dollar is looking pretty good again. It's finding some decent support down in the low 111s, down towards 111.30, 40, that sort of area. We're finding that it's ranging quite a lot now. I mean, yesterday I think we had about 30, 40 pip range for most of the day, but we're still stuck between that sort of 110, 113 mark. And the PMIs were solid this morning. Again, it's showing good growth prospects in Europe, but we're still not managing to make any real waves in the currency. So you've got to think about where the trade is. Is it trading on the data, or people still got one eye on the central bank?
Okay, well, let's have a look at the live chart, a 50-minute chart of cable, pound dollar, just coming off the fading below 127.50. What's your call here at the moment?
I think there's a strong case to see the pound rise here. I think the market is not pricing in a more hawkish BOE. This week the big event was obviously Andy Haldane coming out with some very, very hawkish comments for him. And, we're up into 127. But if you look at the actual numbers behind the MPC now, the vote was 5-3, so 3 hawks now. One of those has gone, obviously Forbes, going to be replaced by the new lady. Don't know how she's going to vote.
She's a total dove, I think.
Well, we'll soon find out. But if the next meeting in August, if Andy Haldane decides to pull the trigger, potentially we've got a 4-4 vote on a split vote on hikes. That's if Charlotte Hogg still isn't replaced. So there again is another wild card, and it's all leaning to the fact that there's a higher risk of seeing a much more hawkish Bank of England coming into August, and I don't think the market's pricing that in just yet.
Maybe they're also not pricing in Mr. Haldane trying to become the next governor of the Bank of England.
Right? No, but he's just signed his new term, so he's got at least 3 years on the sidelines. But you never know, But it's still been several months, and they still have not replaced Charlotte Hogg. So we've got a real wild card coming in.
I think they can't find anybody who's not related to one of the major high street banks. But let's look at the trade of the day, where we've got cable. Pound dollar momentum returning to the upside following a failed break into new lows and very oversold conditions throughout the past week. Buy pound dollar at 127.40.50 on stop. Take profit at 128, extension towards 128.50 if momentum is present. Stop loss at 127.10 once you're in. So the risk-reward ratio 2 to 1. So we're basically looking at we just failed around the 127.40.50 area now.
Yeah.
But is that the sort of thing that you do a lot? I mean, that's sort of stopping yourself into a trade.
Yeah, you can. If you see a good solid level, like up there, which is obviously the levels there, and it was the higher today. So that's why we look at these levels to pick where, if it breaks through that level, it's likely to carry on. As we can see from that chart, 126 is a solid support area. So conversely, you could take the opposite trade of trading a stop sell through that level. But I think that's a pretty good trade. As long as the support holds, then and you've got a pretty good trade there.
Okay, let's move along if we can. These are trading positions, so 50-50, let's say, in the euro, cable, yen, and then also maybe even the Aussie. A bit more on the long side there. Is that a surprise for you?
No, it's always resilient, the Aussie. It's always resilient. It's very hard to sell it sometimes. And trust me, I've lost a lot of money trying in the past. It's my nemesis, that currency. But I mean, if you look at dollar CAD, 100% longs, and that's still into a hawkish BOC now. And we've seen over the retail sales yesterday, the dropped to nearly 100 pips, and anything that's coming out that's supporting a hawkish BOC is now going to send dollar CAD lower. So you've got to wonder if those traders who are 100% in longs are going to start getting worried.
almost like the 100% short in euro sterling. Is that
I'm more inclined to stick with, again, based on the possibility
from these
of
levels, maybe because we're at the high levels now.
Yeah, especially off the top. The top of the recent range, I think is a good trade. If anything, on the back of the Bank of England becoming more hawkish, but obviously the Brexit risk is still in there to a great degree.
Yeah, I think the interesting thing there is that traders have been short right through.
Yeah,
so
they've had that one from the off.
Short at 83, 84, 85. So that's the only thing. Now it doesn't. I mean, 88 to 88.50 looks pretty decent, doesn't it? I mean, it would take a lot to get through there, wouldn't it?
That's right. And if you do, then you've got the big 90, which is always going to be a big psychological level and a big number that traders like to lean against.
Yeah.
So I'm liking the look of shorts more and more.
So that would be the best. I mean, the best trade at the moment for you.
Yeah, I think so. Yeah, if you get against those good levels, if they hold, then on an intraday basis or a longer term basis to get against those big levels and sit on a good trade.
Okay, let's look at the economic calendar if we can. And here we've got the Bank of Canada CPI core. In the US, market manufacturing PMI, new home sales, and then the highlight of the day, FOMC member Powell speaking.
Yeah, as we just said, the BOC, the inflation numbers, anything that comes out strong is again going to play into the hands of this newfound hawkishness from the BOC. So that's going to be a big watch again, because if it does come up strong, then you're probably going to see another good 50 plus ticks on that move into the CAD. It's manufacturing day. We've had it in Europe, and the US is obviously hitting it this afternoon. They want to see probably a bit of a better numbers coming out of there, because they're also starting to see some weakness coming into various parts of the economy. Obviously, the jobs numbers in that will be important too, to make sure they're maintaining the strong growth. New home sales, housing has been on a steady path. We're still quite below the highs pre-crisis, but it's there's nothing really flagging any warnings in the housing market, which is something you want to see, a strong housing market supporting the economy, especially when they're raising rates. But a couple of months down the line, are we going to start seeing housing affected by these higher rates hitting mortgages and how much people are having to borrow? So that's something to keep an eye on.
Okay, well, that's it for FX Street Currencies in Play, brought to you in association with Royal Financial Trading. Thank you to Ryan Littlestone, currency strategist, and see you again next time.
Cheers.